So today in the FMCG space, we do have two brokerage notes coming in. One is for ITC and the other one is for HUL. So first I'll take you through the brokerage note coming in from Morgan Stanley for ITC. Now Morgan Stanley has initiated coverage on ITC on the stock with an overweight rating for the stock, and the target price for that is at 251 rupees per share. So post this, we've seen that today ITC stock has actually been buzzing in trade. It's up as much as 3% in trade post this note which we came in this morning. Now what the brokerage firm is saying is that they believe ITC has exited its painful decade of high cigarette taxes, whether you look at ESG headwinds, diverging global trends, and underperforming FMCG business, and obviously the losses of foreign inflow is also something that has been changed, and that is surely the headwinds are behind is what Morgan Stanley is actually highlighting. While obviously not all these headwinds have still gone away, it sees two that could drive the re-rating is the stable tax environment now, as well as the gradual FMCG turnaround that we are seeing. So obviously that is something that is very important also. Normally when we used to see ITC, whenever there's a slight bit of a tax up movement also, a lot of impact comes on the ITC stock price as well. So obviously because of the stable tax environment, there is some stability even in the stock, and FMCG business also is seeing a good turnaround if you look at it in the last couple of quarters as well. Now another point that we should not forget is obviously the valuation has remained quite attractive for ITC. That has been one of the attractive stocks still in the FMCG space, but more importantly obviously the moderate tax increase over the medium term is something that Morgan Stanley believes will bring profitability back to the cigarette business as well. Now that Morgan Stanley believes is not priced in yet, and that is what it is making a special note for, that this also is not priced in, and that's why it's expecting an upside for ITC stock from here on as well. Now other than that, we'll talk about HUL now, where Citi has come out with a note where it's maintaining a buy stance on the company with a target price of 2,625 rupees per share. Now what they believe is the HUL business has a steady business trend which has been going on, and the underlying growth for HUL also is expected to continue to improve going forward as well. Now despite all this COVID issues which have been going on and COVID linked volatility that has been going on, they expect this to improve going forward in the parts of the country. Despite all this volatility, they are expecting an improvement, so surely a positive sign over there. And obviously let's not forget the gradual reopening that we are seeing also is going to benefit discretionary items as well as out-of-home consumption categories as well. Now cost inflation also is something that does impact the company, but they have been passing it on in a calibrated manner, so that is also not a much big of a worry coming in over there. And also HUL stock, what they are highlighting, has lagged the market rally in the recent months, so that is also surely showing some signs that that opens up a 90-day positive catalyst also, which they will be keeping and watch on HUL as well, and especially ahead of the results that will be coming in April and May. So let's keep an eye out on HUL as well on the back of Citi's note.